All right, good morning. Today is September 13th, 2023, and I'm back with another Wednesday live show. And of course, everyone knows this morning's big news was the CPI and the core CPI inflation rate because everybody is wondering if the Fed is done hiking rates, if they're going to hike again next week in September. If and so the funny thing is that this morning there was an article published. I think it was like Fortune or something, but article published that said that most economists, or the economists, expect that the Fed is done hiking rates. Right? Where have we heard that before? Seems like last year. You remember all the talk of a pivot, and the Fed was. I remember so many times like seeing articles that said that the bond market was expecting the Fed to lower rates sometime in 2023, and it's pretty clear now that that's not going to happen. And so it's kind of interesting that the bond market would get it wrong because, back in the old days, they had what they call bond vigilantes. Some of you may remember that term. And supposedly the bond market was the smartest guys in the room, right? So, anyway, we're getting no pivot in 2023. We're not getting lowered interest rates this year, and so now the talk is higher for longer and stagflation, all that good stuff. So CPI came in at 3.7% year over year, which seems to me that in the past year that a lot of prices have risen a lot more than 3.7%. But at the same time, the core CPI actually came down. And so the CPI was a little hotter than expected, but I believe that the Fed is focused on the core CPI, which is 4.3%, down from 4.7%. And I think that's what the Fed watches because it excludes volatile food and energy prices, right? And so the price of oil's gone up quite a bit, but interestingly enough, just recently the price of gas here has come down, so I can't figure that out. But anyway, so the funny thing is that the CPI is going back up a little bit. It rose, but the core CPI came down. But the core CPI is still more than double the Fed's 2% inflation target. And so, quite honestly, I'm not even sure if which one, whether they use the core or not for their 2% inflation target. But anyway, they're in kind of a quandary, and the main takeaway from all the CPI nonsense and the inflation rate and all that is, in my opinion, the main takeaway is that you know if you say inflation, you should almost be required to say rate of inflation, like, because that's an important distinction. Because once prices go up, they stay up, right? And so if inflation comes down, if inflation went to 0%, that which they couldn't possibly tolerate, but if the rate of inflation went to zero, that would just mean that there was no more price hikes, so the price of all the stuff that we buy is going to remain high. And the general price level of everything has probably risen, roughly 30% in the last since the pandemic, pre-pandemic in the last few years. And so those prices aren't coming down, right? Everyone raised prices and raised prices and raised prices because there was inflation. And so inflation was actually a convenient excuse for every company in the world, practically to raise prices, except Tesla. For whatever reason, Tesla has been lowering the price of their car, but every time you go to buy something, you know that the prices are higher than they used to be. And it's not a recent phenomenon, the price of the general price level of everything has been rising my entire life, and the same thing with my parents and grandparents, and that's just the nature of the system. But the big problem is that in the past few years prices have gone up dramatically on just about everything, and so that's a problem. um, Anyhow, so in the middle of that rant about inflation, I pulled up a chart of the S&P. This is the chart that we've been looking at here for the past few weeks, and basically, it's got support and resistance on it, right? And so as you can see, we're kind of like right in a little no man's land here, quite frankly. Um, let's see, if I draw a trend line sort of across these, this is an interesting little pattern that we're in here because there's actually a lot going on, and it depends on, how zoomed in, like we're zoomed way into the action right here, right? So you've got there's a nice little overhead resistance line here, in sort of the short term price action. Well, let me zoom this sucker all the way out just to get an idea of the bigger picture. I guess it's probably a good idea to start with the bigger picture. So I was telling someone, I was talking to someone on the phone the other day, and I was telling them that anytime I look at a chart, I always zoom back, at least now, to the pandemic sell-off so I can see where something is in relation to the pre-pandemic highs, right? And of course the lows, and just basically see, the bigger picture. You really have to go back to include the beginning of 2020 on this chart. And so there it is. All this aside, because it looks a lot different when you include this, you include the sell-off, and then, as I keep saying over and over, speaking of inflation, this rally right here between, the spring of 2020 and the all-time high in the history of the world at the beginning of 2022. So that little, almost 2-year rally in the stock market is part of the reason that, that inflation's a problem, because the Fed panicked when this happened. The S&P sold off, about 35% from intraday high to low. So you had this huge sell-off in like just a few weeks. The Fed panicked, they slashed interest rates to zero, and then they just opened up the money spigot, right? And so I keep seeing this statistic floating around, and I'm not sure if it's completely accurate, but it's something to the effect of, 80% of the money that exists, like 80% of the US dollars that exist, were created in the last 3 years or something like that. And so anyway, that's what this big rally was about, was the money creation, right? Um, and consequently, back in the old days, somewhere on my computer I've got like the definition, a real good definition of inflation saved, and it's something to the effect of, rising prices are the result of inflation. And back in the olden economist days, the Adam Smith days, the definition of inflation was creating money out of thin air, watering down the money supply. It was inflation in the money supply, and higher prices were the result of that. And so anybody that's, geez, if you took Economics 101, and so, I mean, the Fed thought that they were going to, create trillions of dollars to offset the effects of the pandemic, and whether that was the right or wrong decision remains to be seen, I suppose. But anyway, so that's why we find ourselves in this mess. And of course, there's all sorts of repercussions and different things that are going to effects that haven't been felt yet, in my opinion, because they just embarked on like the fastest rate hike cycle, and well, I won't say in history, but maybe it is. Anyway, it's a mess, and typically the stock market keeps up with inflation. And that's sort of the idea, is like the stock market is like the one thing that, that people put their money in and keep up with inflation. And so, like, I think I mentioned this last week, countries like Argentina and Venezuela, and that their stock market, is up huge, Except, you got to think of it in nominal terms, right? So did your purchasing power actually keep up with, the rate of inflation? But anyways, all that aside, let's look at let's zoom in on this chart a little bit here, and it looks like before I zoom in, I'll zoom out. Looks like a big giant cup, and quite honestly, it looks like it's going back to the high, but I'm waiting for the inflation numbers to like come into the actual official CPI calculator, because keep this in mind, it goes to what I was just talking about. Now enough time's gone by, and we've had all this inflation here. I mean, we're going to be 2 years since the last peak here at the end of this year, so we got a few months left. But basically, the S&P is going to have to be at like up here at like 52, 5300 to match the purchasing power of these prior all-time highs. So if you adjust for inflation, like if you adjust this 4,800 high for the inflation that's transpired since then, right? Yeah, you're gonna have to be about 52, 5,300 just to keep up, so to speak. And so that's I mean that's kind of neither here nor there, but it is a valid point, I suppose, right? Because in inflate, we could make a nominal new high, and inflation adjusted, it's not actually a new high. So, but anyway, that's neither here nor there. It's just a fun little fact. So, as I zoom into this chart, it's clear that we kind of bumped up recently. In I guess was that mid-July over the summer. The market had this nice little run, just kind of one little pullback there, but basically from April to July, market had a pretty good little sort of straight up rally from what is now support. So basically, it was a resistance area at the time. This was, and I didn't take it all the way back here, but it was a fairly decent resistance area that the market managed to break through going into the summer, and it just ran up, right? And so the funny thing is that I'm pretty sure that it was like a little over a year ago, like last July, the market had this big run here based on the idea that everyone thought that the Fed was done hiking rates and they were going to lower rates, and the whole pivot thing, which was ridiculous at the time. So I remember, personally thinking that, there's no way that they're just gonna turn around and lower rates, because inflation was insane. I think it peaked in like June or July of last year, like 9.1% or something. But the thing to keep in mind is that inflation is cumulative, right? So, so if the CPI, and see, here's the thing, is like I go to the store all the time, and I know for a fact that the majority of stuff that I buy is more than 3.7%, higher than a year ago. I would say on average. So there's certain things that at the grocery store that sometimes it's buy one get one free, or but there's a lot of stuff that I still get sticker shock at the grocery store occasionally because I have a good memory. I can remember what I used to pay. And so anyway, long story short, the S&P right now. So if we zoom back in here, and let's zoom into the October low here. So that was kind of a crazy sort of spike low after a bear market, right? It was a bear market with a couple of big rallies in it. This one always gets me here, how it poked up and right to the underside of the 200-day moving average and got rejected, and then just went down like that. Meanwhile, this 50-day moving average, I saw I saw an article yesterday about how the S&P was back, all the averages were back below the 50-day. You can see that the 50-day just gets crisscrossed like, like it's nothing. There's only a few spots here where the 50-day even seems relevant to me, quite honestly. So, yeah, there's certain times where markets respect certain moving averages, and then there's other times where they don't. And and so, I mean, obviously everyone loves moving averages, but and back in the day, maybe the markets respected moving averages a little bit more than they do now. But all that I know is that I think I think horizontal levels and trend lines are more useful and more important to me anyway than moving averages are. So I still have moving averages in all my charts, and there's certain ones that I think can be important on different time frames, but something like trading off the 50-day would make no sense because of all the times that the market seems to vacillate around it. So maybe people care about it in the short term, but anyway, like this major trend line, which could be drawn a couple different ways. If I had candlesticks here, maybe I would eliminate this low and draw it, and it would be a little bit lower. No big deal, but anyhow, these trend lines, like, see, here's the thing about a trend line is like, what, say the market started to fall and say it was headed for 4,000, just hypothetically. Say the market was going to tank and go down to 4,000. Well, I know for a fact it's like a law of nature that it would have to break that trend line and get below it in order to get to 4,000. And so to me, that's kind of like, that's just a law of nature. And so like this, kind of support level I have drawn here, right? It's almost a horizontal support, not quite, but it's a law of nature. It's like a mathematical fact. If the market's headed a lot lower, it's going to break down below that line first, right? And so that's why I think trend lines are useful. Some people swear by technical analysis, and in this day and age, I believe that there's probably a lot of computers and trading programs and AI stuff out there that's designed to thwart textbook technical analysis. And so, like I said before, when I see textbook technical analysis, like a run up, touch the 200-day moving average, and then straight back down, I'm always like suspicious because it's just too perfect. But every now and then it does work perfectly. But so here we are. We're in this big sort of triangle pattern. I guess you could call that a triangle. It's not quite a right triangle, but, and again, if I was using a candlestick here, I might put that trend line there and cut the tail off of this one. So however you want to do it, it's no big deal. And so, I've been saying for years too, like a couple of pixels on the a couple of pixels on the screen, doesn't validate anything. And so it doesn't really matter whether you use an open, high, low, close, or candlesticks or whatever. It's sort of conceptually, like I was saying. So big resistance zone overhead, big support zone down below, along with this, closer support. And I did see a statistic earlier in the week that there's been like a really long stretch, like without like a sell-off of more than 1.5%. In other words, the market's been kind of tame. We haven't had a really big sell-off in, it was like 90 days or 90 something days. Every day is a little bit different, but there was a day recently where we had, intraday, I think the market might have been down 1%, but we haven't seen any really long range down days in a long time. Which doesn't really mean anything, but I'm going to keep my eye on this. So as we zoom in here, you can see that today's only today's only Wednesday, but you can see that we got a lot of little narrow range bars. I mean, there was that sort of big down bar that might have been like a percent, close to a percent. We had a big up day in that, but we haven't seen any real, like, maybe, well, I don't know. I mean, I'd have to go back, and we haven't seen any real big moves in a while. And so market's just sort of consolidating in this area, fluttering around this 50-day that, in my opinion, doesn't really matter that much at this point. So what matters is whether it can manage to rally. And keep in mind, as I mentioned last week, going into last week, is the beginning of September. So September is historically and seasonally is the weakest month of the year. And everybody knows that. And so, maybe we get a little sell down towards this. I'd like to see the action pick up. I'd like to see, like, a scary sell down or whatever, and then, a big rally or whatever. And so, for the time being, we're stuck in between these couple of lines here. And even if I were to slope this one up, make it this one, you could make it a horizontal line and say, okay, this is generally, so it's about 43.25 or something. Just call it, let's see, what do I have it at right now? 43.34. So you could almost go with like 43.25 to 50. I could draw another like zone there that's basically support, kind of like I have, these zones are drawn. Anyhow, so that's the thing to watch now. And, the market's just kind of, stuck in this little pattern here, like a little support and resistance pattern in the context of major support and resistance pattern. And I'm not gonna try and pretend to know which way it goes. And I suppose that, we're kind of in a little bit of a holding pattern, because I believe that the Fed meeting is next week, and so depending on, it's not even what they do, obviously, unless they surprise the market. Like if they surprise the market, but I believe the consensus right now is that they're going to hold steady. And so if they do that, I'll probably come back here next week, and we'll still be stuck inside of this pattern unless something sort of comes out of the blue. So let's see. Let's look at, here's something I was looking at here just recently, and actually I have an IWM chart that I marked up. Let me see if I can find that, because rather than drawing on this one, I did sort of the same thing with the IWM here. See, that's not it. I don't know what that was. There we go. So you guys remember, a few weeks back, maybe a month, even longer ago, I drew this little box here, and the funny thing was we were right up at the top of it, right? Like this, I drew this box right when the IWM was in this spot right here and about to sort of bounce off of it. And I thought that was pretty darn interesting, because, it was the same sort of thing. It was like this, the support and resistance. But I talk about technical analysis, textbook technical analysis. What was insane about that is how you had these three peaks here that came right up to like this major resistance, and then, and then we actually did get the sell off. And so look where the Russell is right now. That's a little bit concerning in some ways. And I always mention this for 10, 20 years, I used to always say that the Russell 2000 was more like the average stock. The average random stock seemed to, be reflected more in like the price pattern of what the Russell was doing. And so you can see that quite frankly, the Russell 2000, so here's the October lows, right? There's your October lows, and then of course these are the highs that it's managed to rally up to a couple of times since those lows, and failed. And quite frankly, you got at least what looks like, I'm not going to draw fibs on this chart, but you definitely, have retraced about a third of that, if not a little bit more. And excuse me. That might be the first time I've ever sneezed on the show. Anyway, Russell's looking a little precarious here. There's the 200-day moving average, and of course we all know that the market dynamics have changed, right? Everybody's piled into the big, the big mega cap tech stocks, and so Apple had their big event yesterday. Apple's looking a little bit rough here, and so back in the olden days, before I was around, there was old saying, "So goes IBM, so goes the market." And nobody ever got fired for buying IBM and all that. So IBM used to be like the market bellwether back in the day, and um, and so Apple is now the market bellwether. Not a real. This is not a real pretty chart, to be honest with you. And so, as much as we all love Apple, and there's my iPhone laying at the desk, beeping at me as you people texting. But anyway, Apple's in sort of a precarious spot here. I used to have a trend line on the show. I had a trend line drawn across those lows, and then I believe earnings came out, right, or something like that. Anyhow, this is what we got here, and this is not. I mean, if I didn't know what this was, if this was just some random chart or whatever, I'd look at it and I'd say, "Whoa, this is not an extremely construct. This is not an extremely constructive technical pattern." So we'll have to see what happens here. And of course, there's the other mega cap tech stocks that sort of hold the market up, but be interesting to see what happens. Oh, what I was saying before is that, Apple had their big event yesterday where they launched the iPhone 15 and all that, and talked about upgrades to all their products and this and that. And so it'll be interesting to see, how that works out, because here's the thing is, and I'm an old guy, and I'm a little bit different than I have different habits than a lot of younger people. But the thing of it is, I'm on like my third iPhone since they invented it. So quite frankly, they upgrade the camera a little bit. They add a couple of bells and whistles I don't care about, and so I always joke around, if I had a camera that I could text on, then I wouldn't need a phone. So I use my phone for a camera and for texting primarily. So every now and then I make a phone call or talk to somebody. But anyhow, yeah, Apple's looking a little bit rough. Let's see what Microsoft looks like. Some of these charts, quite frankly, Microsoft's got a pretty interesting pattern. Oh, I see what's going on here. Ever since I switched charts, sorry about that. I'm looking at my screen and not the show screen. So I had when I switched to IWM, my chart was set up a little bit different. That's what it was. Anyhow, yeah, Microsoft kind of had this nice little sort of scallop pattern here, and this just perfect pivot low back in mid-August, and it's kind of coming up here, and so yeah, it's kind of there's a little bit of resistance, obviously, right here. But this is this is a pretty nice technical pattern. So unless we get some sort of a breakdown and rollover, it did come up and sort of touch resistance. But see, here's the thing: is it was kind of climbing up, and then we've got a little bit of a sell down just the past yesterday, basically. And so now, and I'm going back to see, that's, to me, technical analysis has always been sort of like one of these things, like I was saying, if Microsoft is going to go back to these highs, up here at say 360 or whatever, if this is going to happen, we know for a fact it's a mathematical certainty. it's going to break through this trend line on the way there. Like it can't, it can't get back to the highs without going through this trend line. So that's actually a pretty good technical setup for Microsoft right there. I think Microsoft looks a lot better than Apple. That. And then, Google, whoops, gee. Ever since Google had like two classes of stock, there's Goog and there's Google, which kind of drives me crazy. But and I always used to actually look at Goog. Let's look at that just for the fun of it to see what the difference is. I mean, they look identical, but the charts, I mean, literally, it's like they track identically almost. Although I don't follow it that close to know, but anyway, that's a pretty constructive chart too. You zoom out on that, and it's got that big, gigantic cupping pattern that kind of keeps stair-stepping higher, and so that's a pretty constructive pattern. Now, of course, same thing, just like the market. There's still like a big zone of overhead resistance on Google here. So, for simplicity's sake, you could basically say it's like between 140 and 150. So that's a lot. That's a lot of overhead resistance to chew through. But at the same time, it's got inertia, right? I haven't used that term on the show in a while, but the inertia is that it's headed higher. So it could stall out and pull back at any time. But anyway, it's Google's also got like a big support level right down there. And so, that's a constructive chart too. Let's look at Tesla, because Tesla got a big upgrade coming into this week, and boy, it's way down. I mean, look at this, right? Tesla was $400 and then it sold down to 100. And then, like so many of these mega cap tech stocks, right at the beginning of the year, someone rang a bell and everybody bought a bunch of these mega cap tech stocks. Hey, you're right. There was a pretty significant rally that started right at the beginning of the year, and so anyways, yeah. And so look, it's gone from 100 to 270, but it had been and there was a couple of big rallies there. But anyway, Tesla was the thing that's so interesting on this chart is, like a couple other charts we looked at, is you had pretty significant sell-off and then just a textbook pivot low, and now it's headed back. And so, yeah, on Monday, it was starting to flounder a little bit, and then some big firm upgraded them, going into the session on Monday, which probably indicates that they were like loading the boat with the stock, as it went from 300, down here. They were loading the boat, and then, they upgrade it so they can sell shares to, other people, because that's the way Wall Street works. So anyway, real quick, did we look at the Qs? The Qs have got a very similar pattern as the S&P. You got you can draw a couple of trend lines. As far as like a lower trend line here, probably better off like using like a support zone, say. I suppose you could ignore that one and put support on the Nasdaq 100 down here around 360. So same sort of thing, really constructive pattern, nice little pullback and run up, and just sort of stuck in no man's land here, right? Until this resolves either way. And so I'm not going to bother to draw the major support and resistance, but you kind of get the idea. And so last thing I'll look at is, and I don't even know which one of these is oh jeez, these charts just drive me crazy sometimes. That was my cue there. My phone's starting to ring and all that kind of stuff. But anyways, so oil's gone up, and you got the OIH, you got the IEO, and so look at these things: oil and gas exploration and production, right up near these highs. XLE, XLE's like the majors. It's starting to sort of break out here to new highs. Let's look at the weekly chart on a couple of these. Yeah, so I mean, you go back and yeah, there's XLE. Look at that. And so the last thing that we want is, let's go back to here's one, XOP. I for a long time I always said that XOP was better than XLE, but anyway, so all of these things, these are all iShares. These are all ETFs for oil and gas, basically, and you can see that they're all, and this is a weekly chart now, so you can see that they're all pushing new highs. Interestingly enough, I mean, the price of oil is not at highs, but energy stocks have been doing really well lately, and so keep an eye on these. If they break out the new high, I mean, it's on an upward trajectory, and so, and of course, we all know that I'm not even going to get into it because I don't have time about draining the Strategic Petroleum Reserve and OPEC cutting and then, Russia and all this stuff. But anyway, the price of oil obviously is sort of the wild card as far as inflation goes to circle back around. And if oil, which I guess I could pull up here, WTIC. So there you go. There's a weekly chart of oil, and the funny thing is that, well, look at it. It's almost $90, right? Down significantly from, the highs. So look at that. Look at how it went haywire back here in 2008. I mean, you don't want it to go haywire. So the price of oil seems to go haywire right around, when things are insane. Like this would have been the pandemic sell-off, and then this is when, the Fed slashed rates and created trillions of dollars. And so anyhow, you can see this sell-off way back here, 2007, 2008 rally and sell-off. You can see how it rallied up and then just kind of got stuck like in this range. And so we got the big rally and pretty decent sell-off, and then maybe it'll get stuck in this range. But if oil goes back to $100, that's not going to help inflation at all. So, and of course, I'm not the only one that talks about this stuff, but it is what it is. And so I saw an interesting stat that said that the United States is still using about the same amount of oil as per millions of barrels per day as they were several years back. So that's an interesting statistic. But anyway, so I'll leave you with that. I'll leave you with the weekly chart of the SPY. And when you look at a weekly chart, and of course, there we go, back to the pandemic, it's a pretty nice looking little cup there. And I've been saying for a while since it's come back up from, it actually formed this cup. It kind of looks to me like, it wants to go back to new highs. But keep in mind, like I said before, it's got a long way to go to make an inflation adjusted new high. So that's the big question. And of course, being September, maybe we get, there's lots of zigs and zags, and maybe we get a zag. So, and barring anything crazy from happening, the next pullback may present a longer term buying opportunity. So it's anybody's guess right now. I wish I could say for sure. But anybody that tells you they know that, the market's going to new highs or the highs in and it's going to tank, anybody that tells you that is, nobody knows, obviously. Nobody knows. The pattern looks constructive to me. Cup, and even if we formed like a big handle and got a deeper sell-off, the weekly chart looks constructive. If this was any, if I had no idea what this was, somebody showed me this chart, I'd be like, well, geez, that's a big giant cup. I've seen that before, and they tend to like consolidate under the highs and then break out and keep going. So that's what I'll say. Anyway, thanks for tuning in. Join me next week, same time, same place.